The U.S. saw a surprising and dramatic slowdown in hiring last month. The Labor Department on Friday reported the economy added just 194,000 jobs in September. That's less than half of what economists had been expecting. The disappointing number could further temper expectations of a swift rebound, still hampered by shortages in workers and raw materials stemming from the health crisis. The news wasn't all grim. The unemployment rate dropped nearly a half percentage point to 4.8%. One of the sectors that saw the most hiring, leisure and hospitality. But even that industry added just 1/5 of the gains seen in July, and hiring at restaurants and bars was relatively flat. Employment in education fell in a month when back-to-school hiring typically occurs. The report said the health crisis has distorted the normal seasonal hiring patterns. But job growth could pick up as infections subside. What's more, schools have fully reopened for in-person learning, enabling more people to rejoin the labor force. And the labor squeeze could ease. Federal government-funded unemployment benefits expired last month, and that could push more people to look for work.
Back in 2008, the Democratic Republic of Congo struck a big deal with Beijing. China's state-owned firms would build hospitals and roads in return for revenues from copper and cobalt mines. 13 years on, critics say few of the promised benefits have materialized. Now a new report by a global anti-corruption body, seen by Reuters, calls the deal unconscionable. It urges Congo to cancel an amendment signed in secret in 2017, which sped up payments to Chinese investors. The report may be welcomed by President Felix Tshisekedi. On a recent visit to a mining area, he told residents he was re-evaluating relations with Chinese investors.
We have noticed for some years that people come into our country with empty hands and pretend to be entrepreneurs and leave with billions in their pockets, but we remain poor.
Tshisekedi's move marks a rare pushback by Congo. Now the full report will be published later this month by the Extractive Industries Transparency Initiative, which tracks money flows in oil and mining. It has no legal force, but could bolster Congo's bid to rejig the China deal, and maybe make Beijing change its approach elsewhere. Jean-Pierre Okenda is an expert on Congolese mining.
I think that this report might make the Chinese government think twice in terms of making deals in countries with weak governance, countries where the administration is not efficient.
Global industry will be watching too. DR Congo is the world's leading producer of cobalt, now of huge strategic importance as a key component in batteries.
Bonds and shares issued by Chinese developers tumbled on Friday. It comes as markets there return from a week-long holiday with few clues on how regulators aim to contain China Evergrande's debt problems. The property group faces one of the country's largest defaults, with more than $300 billion of debt. Its potential collapse has investors worried about contagion spreading through the property sector in China. Evergrande's debt-laden peers have also been hit with rating downgrades on looming defaults. On Friday, onshore bonds caught up to the selling. The Shanghai Stock Exchange suspended trading in two bonds issued by smaller developer Fantasia. One dropped more than 50% after the group's controlling shareholder missed the deadline for a $206 million debt payment. Chinese regulators have not made any comments specifically on Evergrande during the holiday week. Investors have waited to hear from the firm after it requested a halt in the trading of its shares in Hong Kong on Monday. It said an announcement was due about a major transaction. Worries about Evergrande contagion also hit share prices Friday. One index tracking the property sector was down 1.75% in afternoon trade.
It's been a month since El Salvador became the first country in the world to make Bitcoin legal tender. While more people in the Central American nation are adopting the cryptocurrency, its rollout has been far from smooth. Only a fraction of businesses have taken a Bitcoin payment, and technical problems have plagued the government's cryptocurrency app Shivo. The government says about 3 million people have downloaded the app, but few use it on a daily basis. Some have reported irregularities with transactions and attempts of stolen identity. According to the Salvadoran Foundation for Economic and Social Development, just 12% of consumers have used Bitcoin. Financial analyst Luis Membreno puts it down to fears about the currency's unpredictability.
The same day that El Salvador implemented Bitcoin as a national currency, it fell sharply and then reached $40,000. It has been recovering, but the Salvadoran people have lost confidence in Bitcoin because the volatility that was being talked about became a reality. If Bitcoin had risen at that time, the population would have seen that it had an advantage and it would have been accepted.
In a country where 1/5 of families depend on remittances from abroad, the need to send money cheaply and quickly is obvious. President Nayib Bukele has thrown his weight behind Bitcoin as a solution and is hoping Salvadorans living in the US will adopt it. So far, 30 Bitcoin ATMs to send remittances have been installed in Atlanta, Chicago, Houston, and Los Angeles. Bukele says around $2 million is being sent via the Shivo app daily. That's still pennies, though, compared to the $6 billion worth of remittances the country receives annually, most of which still comes via money transfers.